You're now listening to the Supply Chain Secrets Podcast, the ultimate insider's guide for all things ocean shipping. Presented by NYFI.
Hi, everyone. You're listening to the Supply Chain Secrets Podcast. I'm your co-host, Caroline Weaver, and with me is Lars Jensen. Lars, how are you doing?
Hello, doing great. Calling in from Copenhagen once more, though, as you can see, not from my home office, but up in actual Copenhagen proper.
You've got a fun setup with the neon lights. Looks like a party's happening there.
So there you go.
Awesome. Let's get started talking about rates. Where is the market at this week?
Heading south on all parameters, basically. I mean, if we start out from the quoted market perspective, the SCFI that we usually look at, Pacific is down. Both East and West Coast rates from China are down $200 per 40-footer compared to last week. But perhaps more importantly, that means that we're now down a full $1,000, actually slightly more than $1,000 per 40-foot from Shanghai, heading all the way over to the US. And we had the apex just 3 weeks ago. If we look at the quoted rates, Europe is mainly flatlining, so not much to say there. That's been the case for a couple of weeks. Flatlining / heading slightly upwards. The more interesting story here is also South America, especially East Coast South America. The SCFI measured from Shanghai to Santos down in Brazil. It's now down $300 per TEU compared just to last week. Really a weak state of affairs in the market over there. That, of course, as we've been talking about many times, that's the quoted part. What do we see in the actual spot market of cargo that has been loaded? Well, we're seeing the same. If we look at the NYFI spot rates just this week around, if we look on the Pacific, China to US West Coast, we're down 13% in a single week. 7% coming from Northeast Asia, and a whopping 23% down if I come from Southeast Asia into the West Coast. But if you think 23% down on a 40-footer in a single week is a lot, try to take a look at a 20-footer. 20-foot rates from Northeast Asia to US West Coast on the spot market was down 33% in a single week. So US West Coast on the Pacific, definitely grounding would be the wrong word, but definitely going down fast. Not so much the US East Coast. If I look at all the different regions from Asia over to US East Coast, rates are down between -4 and -7, which of course is downwards, but no match for the very sharp drops that we're seeing coming to the West Coast. Finally, we haven't talked much about it, but there's also NYFI index for the Atlantic trade. And this week, it actually staged a comeback. We have seen constant deteriorations on the Atlantic westbound. That's the head haul direction from Europe over to the US. It's been going down for weeks. But last week, it actually staged quite a comeback. $250 a 40-foot, which basically means that the declines we've seen since mid-October were fully reversed in just a single week.
So does that perhaps give us some hope on these free-falling rates on these other trades?
I would rather say it reinforces also what my expectation is if we look at full year 2026. I expect to see a lot of rapid up and down, but it's going to be an erratic market. I expect to see a lot more of these where we would then have several weeks here on the podcast talking about how rates go down. Then we're suddenly going to see a significant increase, rates go down again. Demand is erratic. Carriers try to adapt best they can in terms of putting capacity in and out. Never matches what demand does when demand changes this fast, in combination with potential growing global overcapacity. So this is par for the course. I think we're going to have many of these conversations where rates are either going rapidly up or rapidly down.
Yeah, the rates go up and down. The volatility seems here to stay for sure.
Yeah, and you take for all the shippers out there, it's more a matter of beginning to, the wrong word is embrace the volatility, because I don't think anybody likes the volatility, but it is the time to take a look at also some of the tools that are coming out from NYSEX next year in terms of freight rate derivatives and how can you use other tools to mitigate this, because we don't have the tools within the normal ways that we handle container shipping if you want stable economic.
Yeah, that's a very good call out. And in fact, next week, we'll be talking a little bit more about how you can use the indices and contracts to hedge against some of this volatility. and maybe come out on the plus side of it rather than being a victim of it.
Yeah, you think it's important for everybody also to keep in mind these tools that are coming, they are not a magical recipe for making more money. They are a tool for stabilizing your business performance.
Yes, very true. All right, anything else you want to add on the rates piece, or should we move along?
Let's move along. We've got other fantastic topics, I think, to discuss today.
All right, let's talk about tariffs. What's the latest there?
Yeah, I mean, not a week goes by without new news from tariffs. This week, Brazil is the thing, the US-Brazil tariffs. If you think back last week when we did the podcast, we were talking about how there was suddenly an enormous array of mainly food products that were now exempt from the US reciprocal tariffs. This week, we saw the same commodities now be exempt from the other tariffs that were placed on Brazil. For those that have already forgotten in this tsunami of different tariffs, the US placed a specific tariff on Brazil because the American government was displeased with how the Brazilian government treated former Brazilian President Bolsonaro. So that led to punitive tariffs. Well, my interpretation is that the intention from the US more than a week ago was to exempt all of these foodstuffs from tariffs from anywhere in the world, but they must have forgotten that these specific ones in Brazil was not covered under the usual reciprocal tariffs. They were covered under a different executive order. So this now also exempts them from the executive order. Because they apparently had forgotten it, they came out with this announcement on November 20th, effective from November 13th. So we now have a progression over the year where back at Liberation Day, we were given ample warning time from the announcement of tariffs until they actually came into effect. Then we hit the point with penalty tariffs on India, where they came into effect with such a short notice period that some shippers would have already loaded cargo on ships and would then be impacted, to now where we see a tariff change that takes place 7 days back into the past, retroactively. So it becomes more and more difficult for shippers to navigate this tariff landscape, given these shortening deadlines that are now moving into the negative days.
Yeah, you think you've seen it all, and then suddenly there's a new scenario to play out. But I would say this probably is in the best interest of importers to have the tariff removed. So
Well, I'm pretty sure everybody that imports foodstuff are happy to be exempt from that 40% ad valorem duty. And I'm pretty sure the US consumers are also pretty happy they don't have to pay 40% extra on top of whatever value it is of the foodstuff being imported from Brazil.
yeah, and while we're talking about that, what are we seeing in terms of trends for commodities? Are there any new data points coming out about that for demand?
You have different data points. What I picked up on that was actually coming out here. I think they posted it yesterday or this morning from the data provider Vision, and I think some of the numbers they were showing is actually quite interesting because they looked at third quarter 25 versus third quarter 24. So seasonality is not part of it. I mean, it's the same quarter versus same quarter. And they looked at total imports on specific commodities and apparel and footwear. So your clothes, your shoes, import volumes are down between 10 and 17% compared to last year. And that's nothing compared to, for example, furniture, which is down 33%, toys down 35%. And the really big one here is solar panels down 67%. I don't know about solar panels, but when I look at toys being down 35%, furniture down 33%, what I am reading of these numbers is this is only possible if we are talking a significant inventory reduction over in the US. I mean, otherwise, you would see empty shelves over there. I could be wrong, but I'm pretty sure the importers of toys don't really want to risk a lot of empty toy shelves leading up to Christmas. So the only way to reconcile these numbers is if there is actually a substantial amount of inventory reduction.
Yeah, that's a really interesting call out. And I think you're probably spot on there. I'm not seeing empty shelves in terms of goods not being there, but with these numbers, it's hard to reconcile that. So it's probably, reducing that safety stock that you have in warehouses and having that on the shelves.
Yeah, I've seen the broader political discussion over in the US where, of course, there are some saying, well, where's the inflation? Because it's not been risen as rapidly compared to the magnitude of some of the tariffs. And this might be one of the many pieces of that puzzle, that if you're simply reducing inventories, you are not importing as much as usual. That can also explain why the tariff effect is not showing up as massively in the inflation numbers yet as some might have expected.
Yeah. Well, I would imagine it also takes some time for those prices to balance out too. It's not something that can happen super quickly. All right. Anything else to add about that?
No, I think this is going to continue. Of course, what I usually look at every month is also you have monthly inventory data coming out of US, but due to the government shutdown, we're now missing 2 months of data. They're still, I think, working on it, but I'm not quite sure when the next update is going to be. We might have to wait until the middle of December before we can actually put a number on any potential inventory.
Yeah, that'll be an interesting thing to talk about once that is released. All right. So our next topic here, fires on vessels. Not a happy one, but an important one to talk about.
Yeah. And yes, of course, it's not a happy one, but I think at least the happy news here is, for those that don't know, there was quite a significant fire on a 9,000 TEU ship sitting in the port of Los Angeles here in the weekend. The happy news was nobody was hurt. Nobody on the ship, nobody in the nearby vicinity, none of the almost 200 firefighters were involved, so no casualties. That's the good news. Vessel was then pulled about a mile offshore and anchored up there. I think they're still in the process of putting out the fire. This is not as easy as some might imagine. Reports so far is that the fire started below deck. And the problem is if the fire is below deck, imagine you have the fire below deck, you've got a hatch cover on top, and then you've got a few hundred containers stacked on top of this. It is exceedingly difficult to get down and try to address that fire directly. That's the problem. You had some of the images coming out with relatively dark billowing smoke. Whether that includes hazardous material or not is also unknown at this point in time. But nobody got hurt. The vessel is probably going to have to undergo repairs. You're going to have a lot of shippers that might wait a bit for their cargo to find out to which degree it has been damaged. But the more interesting part to me here is this is not a unique case. So I tried to pull out the numbers. How many fires do we have on container ships per year? Depends a little bit about who measures. And let me give 2 data points. One comes from Allianz, which is an insurance company. That probably means that they will include even relatively small fires because there might be smaller insurance claims associated with those as well. Their data shows that in 2024, there was a fire on a container vessel 69 times. That means roughly every 5 days, we have a fire on a container ship. You can also look at Lloyd's lists where they are measuring incidents. It seems to me that they have a somewhat higher threshold for when something becomes an incident rather than just a fire. And what they are measuring is a range roughly over the last decade, fluctuating between 5 and 10. And I would then say that's probably major fires on container ships. And even that's once every month or every 2 months of a major fire. Clearly a problem in the industry. Before anybody says, oh my God, why is nobody doing something about it? There has actually been some initiatives here in 2025. There has been much tighter restrictions now on especially the shipment of charcoal. Charcoal has been involved in a number of vessel fires. There has also been new procedures rolled out by the World Shipping Council to hopefully help vet some of the cargo better before it gets loaded. Part of the problem here is in some cases, it might be the cargo owners that don't necessarily know that their cargo is hazardous. You say, well, if you're shipping fireworks, surely you should know. Yeah, you should. But there are also other commodities where you may not think this is an issue. If you're just sitting at home at your barbecue and you have some charcoal, you might think, what's the problem with charcoal? Well, that can be a significant problem. So there are some commodities that can actually combust that you may not think. So some of this might be, let's call them honest mistakes. Others are clearly also caused by misdeclaration of cargo willfully on the part of the shipper. These are issues that hopefully better procedures is not going to eradicate it, but hopefully can catch up on at an earlier point in time to reduce the likelihood of these fires happening.
Well, and when you have dangerous cargo, it costs more to ship, right?
Yes,
and
it
so
does.
You're kind of incentivized almost to not declare it.
And it's a discussion. It's a discussion that's been up a number of times I've seen over the years, where at times there is the argument being made exactly as you're doing it. We're incentivized to cheat because it's cheaper. So why not tell everybody up front you are not going to pay extra to move hazardous goods. That way you would remove that incentive. Commercially, that has never really managed to get any traction. And also, I mean, if you're being honest, from a shipping line perspective, I might have a 20,000 TEU ship, but it's very limited how much hazardous cargo I can actually get on board. Again, supply and demand.
Yeah, that's true. Well, interesting stuff. Luckily, no one was hurt. Hopefully, we don't see any more anytime soon, but it sounds like we very well could. But we'll keep an eye on this and report more as we hear.
Statistically speaking, if you're including the smaller fires from Allianz, we should probably see 2 to 3 additional vessel fires before the end of this year.
You're probably right, yeah. Statistically, we might see one before the next episode. All right, let's get into our last topic here, which is an update on the vessel that crashed into the bridge in Baltimore.
Yes. For those that might have forgotten, we had the vessel Dali that suffered a major power outage a couple of times in the narrow channel going under the Francis Scott Bridge in Baltimore, eventually crashing into the bridge, causing the entire bridge to collapse. And you also had a few people that sadly lost their lives in that process. Port was closed for an extensive period of time. The NTSB, so the National Transportation Safety Board, released their report and autopsy in terms of what actually went wrong. They, of course, point to a number of different things that could have been improved, but it seemed that the key finding was one single signal wire. This is not a signal wire, but to maybe illustrate it, you at sometimes on wires have these small things that are labeling the wire where it's supposed to go to, which is, of course, nice. These are usually heat shrunk around to sit there. You had a small signal wire. This is a USB, not the same thing, but they had a small label also heat shrunk around the end of it. Apparently, it wasn't set the way it should be set. So out here, it was fractions of a millimeter too thick. That meant that the signal wire had indeed gone into the slot it was supposed to go into, but it didn't quite fit. And that caused simply a cascading of effects through the systems that led to the power outages we saw repeatedly on the ship, eventually with the ship crashing into the bridge and the bridge falling over. To me, that appears as one of these cautionary tales in terms of even the smallest details absolutely matter when we're dealing with large complex systems, in this case, a big container ship.
Yeah, it's absolutely incredible. You would imagine that it's like a big systematic thing, like a process failure that would lead to such a catastrophe, but the fact that it's one wire is honestly astounding. Gosh. All right, well, we got some closure, I guess, there. Anything else to add for today's episode? Are we good to wrap up here?
I think we're already heading the wrap up. I mean, yes, markets are going down. They're becoming a bit more erratic. If you look at the Pacific, I was mentioning how much rates are going down, but make no mistake, the carriers have already announced rate increases to the tune of $1,000 to $3,000 as we get a bit into December. This seesaw patterns of spot rates, that's potentially what we should expect also going forward.
Yeah, we'll see if any of these rate increases stick over time.
With that, at least for the part of the audience that's in the US, I would wish everybody a happy Thanksgiving.
Yes, important call out. I have my Thanksgiving plate earrings ready to celebrate this week. Happy Thanksgiving to all. And we'll be back next week as usual. We'll have a guest. We'll have a few guests actually throughout the month of December. A little present to our listeners. So definitely be sure to tune in and subscribe if you haven't, so you're aware of all of our latest episodes and all of the fun guests that we'll be having.
Yeah. And importantly, it's different guests every week.
Yes. Yeah, it'll be a great time. All right, y'all. Have a great week.
Thanks for listening to Supply Chain Secrets Podcast, presented by NYFI. Be sure to subscribe on your favorite podcast app. Want to be a part of the show? Register to attend a live recording at the link below.